Have you ever wondered how some investors seem to turn modest beginnings into fortunes? How they consistently make decisions that transform small investments into vast wealth? Today, I invite you to join me on a journey through decades of experience in the world of investing. In this session, we'll explore the timeless principles and real-life stories that have shaped my approach to building wealth, and reveal the secrets that can help you succeed no matter where you start. I grew up in Omaha, Nebraska during difficult times. In my early years, I witnessed firsthand the impact of economic hardship, and that taught me the importance of frugality, careful decision-making, and the power of learning. I wasn't given a roadmap to success. My education came from life itself. I studied mathematics and later law, but more than formal education, I absorbed lessons from every experience. I began to see that the world is interconnected, and that you must draw from many disciplines to truly understand it. This idea of multidisciplinary thinking is something I hold dear. When you blend insights from economics, psychology, history, and even biology, you start to see the big picture. It's what I call building a latticework of mental models, and it's essential if you're going to make sound decisions in investing and in life. Now let me share a story from my youth. As a young man, I wasn't particularly wealthy in ideas or money. I remember sitting in a modest classroom and realizing that the textbooks didn't tell you how to navigate the real world. I began reading, not just about law or business, but about human behavior. I read works on psychology and philosophy, and slowly I started to see patterns. I learned that most people are prone to biases. They are influenced by emotions, by herd mentality, and by simple shortcuts that often lead them astray. Understanding these biases helped me avoid costly mistakes later on. I once met a young investor who, in his excitement, threw money at a trendy stock without a second thought. I advised him, "Don't be foolish. The best investors aren't those who are always right, but those who avoid being consistently wrong." That piece of advice has echoed in my mind ever since. You see, the essence of successful investing is not about predicting the next big trend or having a crystal ball. It's about discipline, patience, and the ability to say no when everyone else is saying yes. I always say, it's not supposed to be easy. Anyone who finds it easy is not thinking hard enough. In my early days, I learned that trying to get rich quickly is a fool's errand. Instead, focus on understanding what makes a business tick, and then invest in it for the long haul. I've always believed that if you concentrate on companies with durable competitive advantages and sound management, the power of compounding will work wonders over time. Consider our investment in See's Candies. We didn't jump on the bandwagon for a quick profit. Instead, we invested in a company with a strong brand and loyal customers. That long-term perspective is what has allowed us to build wealth steadily. Let's talk about risk. Many investors fear risk, but in reality, risk is inherent in every decision. What distinguishes a good investor is the ability to manage risk by avoiding catastrophic mistakes. I often say that the key to success is not being brilliant, but avoiding stupidity. There's a lesson in every misstep. I recall an early venture where I overestimated my understanding of a particular market. I made a mistake that cost me dearly, but the lesson was clear. Never invest in something you don't fully comprehend. It's essential to stick with what you know and to continuously educate yourself. In investing, as in life, learning is the antidote to ignorance. I encourage you to read widely and deeply, books, articles, and studies from various fields. Expand your mental toolkit so you can see the world from multiple perspectives. Another aspect of investing that I hold in high regard is the principle of patience. The market can be volatile in the short term, but if you're patient and maintain your discipline, you'll reap the benefits of time. I've seen many investors get caught up in daily market swings and make rash decisions. The truth is, the stock market is a device for transferring money from the impatient to the patient. I once encountered a colleague who sold a solid investment after a minor dip, only to watch it rebound spectacularly later. That's why I always stress the importance of holding on to your investments if you believe in their long-term value. In my experience, the winners in the market are those who understand that real wealth takes time to accumulate. Now allow me to dive into some concrete rules that have guided me over the years, 10 principles that, if followed, can lead you to better investing and a more thoughtful life. Rule number 1. Be obsessed with learning. I can't emphasize this enough. Never stop learning. I read every day, books on economics, psychology, and even literature. The more you learn, the better your mental models become. Knowledge is not static. It evolves as you gain new experiences. I remember when I first encountered the concept of opportunity cost. It changed my perspective entirely. Instead of focusing solely on immediate returns, I began to see the true cost of every decision. That realization has helped me make wiser choices in every aspect of life. Rule number 2, avoid foolishness. It's not about being brilliant, it's about not being stupid. The simplest way to succeed in investing is to avoid mistakes. There's a famous saying I often use, invert, always invert. Instead of trying to figure out how to be brilliant, focus on what you can do to avoid errors. Look for investments where you have a margin of safety. When you concentrate on avoiding big mistakes, you naturally become more successful over time. Rule number 3. Invest for the long term. Short-term gains are often fleeting. The real magic happens when you let your investments compound over many years. I've seen fortunes built and lost on the whims of the market, but those who stick with well-chosen companies reap enormous rewards. Patience is not a passive state. It requires active discipline. When you invest, ask yourself, can I hold this for the next 20 or 30 years? If not, it might not be the right investment. Rule number 4. Understand the power of compounding. The idea of compounding is simple, but extraordinarily powerful. It's not about making one big bet, it's about making a series of smart, consistent decisions. Compounding works like a snowball rolling down a hill, starting small but growing, larger with every passing moment. I've often said that the first rule of compounding is never to stop. Even small gains, reinvested over time, can lead to extraordinary results. Rule number 5. Maintain a multidisciplinary approach. As I mentioned earlier, don't limit yourself to one field of knowledge. The best decisions come from combining insights from various disciplines. I learned from history, psychology, and even biology. For example, understanding human behavior can give you an edge in recognizing market patterns that others miss. This multidisciplinary approach allows you to see connections that are invisible to those who focus solely on numbers. Rule number 6. Be frugal and rational with money. Many people think that once you start making money, you can splurge. I've always believed in living below your means and reinvesting wisely. Even after achieving significant success, I remained frugal. I still look for bargains and avoid unnecessary expenses. Frugality isn't about being cheap, it's about being rational. Money is a tool, and the smarter you are with it, the more it will work for you. I once advised a young entrepreneur who had just made his first million, don't buy liabilities. Invest in assets that will appreciate over time. Rule number 7, embrace your mistakes and learn from them. Every mistake is a lesson in disguise. I've made plenty of errors along the way, some costly and some enlightening. The key is not to dwell on them, but to extract the valuable lessons they offer. I recall a particular investment that went south because I ignored some red flags. Instead of lamenting the loss, I analyzed what went wrong, adjusted my strategy, and never repeated the mistake. In investing, humility and a willingness to learn from your errors are just as important as any technical skill. Rule number 8, focus on what you can control. There's no use fretting about market fluctuations or events beyond your control. Instead, focus on your own decisions and actions. You can't control the economy, but you can control how you respond to it. This principle has helped me stay calm during market downturns. Rather than reacting impulsively, I concentrate on the fundamentals of my investments. This disciplined approach has allowed me to weather many storms and emerge even stronger. Rule number 9, surround yourself with intelligent, principled people. No one succeeds alone. Throughout my career, I've been fortunate to work with brilliant individuals who challenge me and help me grow. I always sought out people who were smarter than me in certain areas, whether it was in the boardroom or over a casual conversation. These relationships were invaluable. They provided perspectives I would never have considered on my own and kept me grounded. If you want to succeed, find mentors, colleagues, and friends who will push you to be your best self. Rule number 10, have patience, discipline, and integrity. Finally, the cornerstone of all successful investing is character. Patience and discipline are the foundation of long-term wealth, and integrity is what sustains it. In my many years of investing, I've seen fortunes built on shaky ethics crumble. Just as quickly as they were built, I always maintained that success should be measured not only by wealth, but by the quality of the life you lead. The decisions you make, both in business and in life, should reflect your values and your commitment to doing what is right, even when it's hard. I once met an entrepreneur who was about to invest his entire savings into a single venture because he was overly confident. I told him, concentrated bets are dangerous if you're not absolutely sure. Instead, diversify and be humble. He took that advice to heart, diversified his investments, and eventually built a robust portfolio that weathered several economic downturns. That's the power of discipline and humility. Another time, I recall a conversation with a young investor who was frustrated by short-term losses. He couldn't understand why his portfolio wasn't growing as quickly as he expected. I explained, "You're looking for a quick fix, but the market rewards those who are patient. The best investment is often the one you hold for decades, not days." Over time, his understanding grew, and his investments began to flourish as he adopted a long-term mindset. I've also seen many examples of how multidisciplinary thinking makes a difference. A friend of mine, with a background in engineering, applied systems thinking to his investment approach. He noticed patterns and inefficiencies in markets that others missed and built a small but highly profitable business based on that insight. It's this kind of thinking, using knowledge from different fields, that can give you an edge. As you listen to these stories and absorb these lessons, remember that the goal isn't to become a genius overnight. It's to cultivate a mindset that embraces lifelong learning, thoughtful analysis, and the courage to stand by your decisions. Even when the going gets tough, there will be moments of uncertainty, times when the market seems chaotic and unpredictable. But if you adhere to these principles, avoid foolishness, focus on what you understand, and remain patient, the rewards will come in time. Investing isn't glamorous. It's a craft, one that requires dedication, humility, and a willingness to continually refine your approach. I've spent decades honing my skills, and I'm still learning every day. The secret is not to be discouraged by setbacks, but to see them as opportunities to learn and grow. Remember, the greatest wealth isn't just measured in dollars and cents. It's measured in knowledge, character, and the positive impact you have on the world. So as you go forward, I urge you to take these lessons to heart. Build your lattice work of mental models. Read widely, think deeply, and never stop learning. Focus on the long term and remember that the most important thing is not to be dazzled by short-term gains, but to build a foundation that will sustain you for a lifetime. In closing, I want to leave you with this thought. The true path to wealth and success isn't paved with shortcuts or gimmicks. It's built on careful thought, hard work, and an unwavering commitment to excellence. Every investment you make, every decision you take should be approached with the same rigor and integrity as if it were your last. If you can do that, you're already well on your way.